Hi all Inderes daily viewers. Hexagon released their Q1 results and today we'll discuss about the company with our analyst Pauli Lohi. Hi Pauli.
Hi Sarah.
The Q1 was a bit soft. The organic growth was 3% and came in below our estimates of 5%. What were the main reasons for this?
Well, of course we expected some softness from the construction industry, which was soft in Europe and China. Also, the industrial market in Europe is bit weak currently. Also, there are some, I would say, maybe high comparable figures from last year, which are more kind of one-off effect for asset lifetime intelligence division. They sold lots of perpetual licenses last year in Q1, and now it was more difficult to grow against that number. But the softness in growth, it was pretty broad-based, however, that there's only one division that actually reached our estimate.
Yeah. Well, how much was the Q1 result actually affected by currency effects?
Well, the currency effects were in line with our estimates, so that they didn't come as a surprise. But the growth suffered 2 percentage points, and I think there was some 16 million euro negative effect on EBIT, maybe some 4% of total adjusted EBIT. So I would say it's somewhat material, but as expected.
Yeah. Well, the adjusted EBIT margin improved slightly and there has been ongoing cost savings and rationalization programs. Have these come to an end or will there be more?
Well, they will continue in 2024. They have reached maybe 75% of the savings. And if you think about Q1, there was maybe 2/3 of savings in place already supporting their results. So they are visible, but there will be some more.
Yeah.
And they are fully in place in next year.
Okay, yeah. Well, how far is the targeted profitability level?
Well, they are currently a bit above 29%, I think, in adjusted EBIT. And the target actually it's bit technical, but it would correspond to some 31% adjusted EBIT if you calculate the PPA, which are the variable here. So there's 2 percentage points further to improve, and I think there is still room to improve. There is these savings, and then there is improving gross margins because the software sales grow faster than hardware, and also the new hardware products have better margins than the old ones. So well, it could be worth to mention that the recurring revenue, which includes lots of software, grew by 6% in Q1. So that's still developing pretty well. But I think it could require stronger market conditions to reach the target. So we don't have any like up market in sight yet.
Yeah.
But if we get one, then I think they will reach the target.
Yeah. Well, we have adjusted our sales estimates for 2024. Could you elaborate on that a little bit?
Well, we adjusted our current year growth estimates to the current reality basically, and took down growth a bit for 24. I think that the growth is likely to recover back to long-term level of roughly 5% organically from the next year onwards. So no dramatic changes, but a slight decline.
Yeah, okay. Well, lastly, how does our valuation and recommendation look like at the moment?
Well, the stock is currently valued something around 20 EV/EBIT if we look at reported EBIT, or 18 if we look at adjusted EBIT. I think these are levels that are pretty fair to Hexagon, or maybe even in the expensive side. Of course, the company deserves high multiples because it's high-tech company with a highly diversified portfolio, and I would say also pretty low business risk. So probably the earnings growth will continue many years still, but currently the valuation is a bit high, and we don't really see any material positive triggers for the estimates in the upcoming 12 months at least. So currently we are a bit cautious and in the reduced recommendation.
Yeah, that's understandable. Thanks so much, Pauli, for these comments.
Thank you.
And thank you all for watching. Read more from the report in Inderes.se.